Oh man, what a crazy week. I was quite busy at work, didn't get the time to look for trades. I definitely missed out on some opportunities, but I still closed the week for something decent. I closed for a profit of 433 net US, so really not bad. Given that I'm doing one contract on everything and paying these commissions with Questrade. So it's a gross profit of $531, commissions of $97, and net profit of 433. So let's go through the trades. So the first one here got a trade that I opened November 30th, Tattooed Chef, a naked put at 15. So because it's a $15 stock, or I chose a $15 strike, it doesn't take much capital. I have no stress. I could easily roll it if ever breached or tested. So not worried about it. Collected $1.17 and I ended up closing it for 55 cents. So that gives me a net profit of $50. And then Tuesday, December 1st, so probably last week. So Neo naked put at 30 with the expiry of January 15. Collected $1.20 and then I closed it for 63 cents. And in fact, Neo dropped hard today, so could have entered again Neo. But I wasn't able to get $1.20. I think I could have gotten like $1.10 or something if I wanted to enter this trade again, but I didn't. Regardless, so that gives me a net profit of $45 after commissions. And then I had a CRM put spread that had opened Wednesday, December 2nd. This is after earnings. This is after CRM dropped. I decided to open a put spread 195, 190 going to January, I believe. Yeah, going to January 15 expiry. I closed it this week, so I didn't have to wait all the way to January. So collected 95 cents to open the trade and I closed it for 45 cents. So a little bit over 50%, but after commissions, leaves me with a net profit of $37. But it doesn't make sense to wait all the way to January 15 just to collect the full profit. Ideally, what I should be doing is placing two contracts so that commissions aren't so big compared to the profits. Because I'm doing one contract, commissions are pretty high. That initial $5 flat fee would get diluted if I did more contracts. So for example, I've got a total profit of 433. So if you think if I do two contracts, you would expect the double of 866, but it's actually going to be more than that because the impact that commission has on profit will be less. So for example, if I do two contracts right now, my net profit, I guarantee you, will be more than 866, will be more than the double of 433. So you could see that net profit would have been 946. So it's way more than the double, almost by $100. In this case, commissions would have been $115. So commissions with one contract were $97 about. Commissions with two contracts, same exact trades, $115. So that's probably what I need to do so that commissions aren't so commissions don't hurt me this much. All right, so going back to my actual trade. So I had a Square put spread that I opened December 2nd. I think when the Square dropped below 200, I did a 170, 165, collected $1.05 going to January 15, and I closed it for 51 cents. So also 50%, a little bit more than 50%. So that gives me a net profit of $41 US. And then I did a put spread, a naked put, I did a naked put on Sumo. This was given to me by a subscriber, did a 20 strike, but once again, because it's small priced, I don't care because there's not much stress. I can always roll the naked put if I'm ever breached. So I collected $1.40, closed it for 70 cents, I think the next day actually. Close it for 70 cents, so that gives me $58 net profit. Chewy, this was before earnings. I did 65 naked put on Chewy, collected $1.90. Definitely could have collected more that same day, but Chewy kept going higher that same day before earnings. So it went to January 15 expiry. 65 strike, collected $1.90. The next day, Chewy was all over the place. I closed it for 98 cents. So I didn't close it exactly for 50%. But still made a decent profit. I think it was my highest profit of the week. Yeah, you could see it's the highest profit of the week. Made $80 net profit on that trade, one day trade with earnings. And then so these were good trades actually. I like this trade, especially RH. So RH was a put spread before earnings, Adobe as well. And if you watch my video about how to manage tested put spreads, I go through how I place these trades and how I actually rolled the initial entries I had on them. So regardless, my new entries on RH and Adobe were at 417, 412, and 460, 455 for Adobe. So for RH, I collected $1.04. And then right after earnings here, let's look at the chart. So you can see Friday, so at expiry, RH closed at 428. My short strike was 417.5. So it would have expired worthless if I kept it till expiry. But let's just look what happened after earnings. The stock went from 470 all the way down to 420. It had a low of 420 on the day after earnings. But because I had so much room, so by selling a put spread, an out of the money put spread, I keep the premium. I win as long as the stock stays above 417.5 come expiry December 11. Obviously, I didn't wait till expiry. I closed it before. I was able to close it for 25 cents. So this is a decent 75% profit on the premium collected when the stock actually dropped after earnings. So that's pretty powerful. I don't have to be right at all. I don't have to guess direction. I could be wrong. I have room to be wrong, and I could still make that profit. So that gives me a $66 net profit on that put spread. And then Adobe, $1.07. Same thing. Adobe fell after earnings. I collected $1.07 and I was able to close it for 40 cents. Gives me a net profit of $54. So total profit for the week, $4.33. I'm pretty happy. As long as I can repeat it, then I'll be happy. But if it's random, then that's going to be disappointing. And what's important to me is that I can repeat these profits, even if it's a small amount. But as long as I'm doing it on purpose, I can repeat it. And basically I can scale it whenever I'm ready. I could scale it just by adding more contracts or doing more underlyings. But definitely to do more underlyings, it would take more time to find the trades. Like I said, this week I was pretty busy, so most of these trades were open the week before and I just closed them this week. Basically, the only trades I opened this week were these 4. So these were the only trades I opened this week that I was able to close this week. And I've got a few that I opened, but obviously are not ready to close. So they're going to probably be closed in the upcoming weeks. And if you want to compare which ones, if I had held to expiry, would have generated more profit. So this one I would have avoided paying those 25 cents and commission if I had held to expiry. But as you can see, it was pretty close. I mean, RH was closed at 428. So it was pretty close for comfort. And Adobe, I had the 460 on Adobe. Yeah, I had the 460 on Adobe. Let's go see what Adobe's trading at or what it closed at. So it closed at 475, but you could see that it had a low of 460, 468. So Adobe would have expired worthless, so I would have kept the full 40 cents. So just for fun, let's just put 0 here and let's just put 0 here and 0 here just to see what it would have given me instead. Probably not a big difference. $511 instead of 433. If I let the trades that expired this week, if I let them go to expiry. Still not bad. I'm happy with the profit for the week. So this was a quick recap for my trades this week. If you have any questions, leave in the comment section below. Like always, if you're gonna open an account with Questrade to trade on the stock market and sell options, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.